Hey, everybody. It is Chuck Barone on Wednesday, May the 22nd, 2024. Another day of madness in finance. Our friends on Wall Street giving us lots to talk about today. Guys, I got to tell you, I thought I was a guy who had kind of seen everything. I've been around a long, long, long time. The madness we're seeing today is just, I can't figure out the right word for it. Um, we're good news is bad news. We're up is down. We're, you know, the wrongest things move these markets in the wrong directions. It's just crazy times, crazy, crazy. But before I get rolling on today's show, let me take a half a second. As always, welcome everybody to the show. As always, again, thank you guys for your support. It means the world to me, guys. The show's doing okay. We want to keep it growing. Nice to see our friends here on the live chat today. We got Salty back today. We got Wolf on today. Of course, Attila, Big Smoke. Greg's on today. Oscar in. Hey, Oscar. Spam Brain. Anyway, nice to have everybody on. Going to be a lively show today, so let's get rolling. Okay, you guys saw these markets today, right? Everybody was kind of, I think, expecting a good day. NVIDIA day today. And they did not disappoint with their earnings, blowing out Wall Street's expectations, and a very, very strong report for NVIDIA. Did it help? Did it help the market today? Nope. Market down, looking like crap. Why? Well, I think the Fed minutes had a lot to do with it. The Fed minutes, I read them over, guys. I plan on doing a big report about them today. I hate to say it, but there just was really not a lot in there to talk about that was in any way or new. The extent of it was higher for longer, unhappiness with the last few reports, with inflation showing higher, well, not showing higher numbers, but not coming down the way they had hoped it was. Discussions about are rates restrictive enough right now? I actually had a few Fed presidents, hey Dean, talking about maybe raising rates. So I think that the market looked at that, decided that they're still having this fantasy of rate cuts this year. So I think that kind of put a little bit of something sour into the punch bowl here today. So the markets reacted accordingly. Negative day for the markets. The Dow Jones falls 201 points, sitting at 39,671. The NASDAQ off its record high from yesterday, down 31 points, 16,801. And the S&P off its record high yesterday, down 14 points, 5307. So the markets across the board, a negative day. I think that it was the market finally catching on to what you and I have been talking about in this show for a long, long time. Things are not as great as they want to believe they are. If you look at the state of the consumer, Target's earnings not so great. Fast food joints scrambling because people won't pay the higher prices, coming out with more and more and more deals to try to attract people back to the restaurants. The lunch business is pretty much a blown up thing now. People are not going out spending money on lunch like they were pre-pandemic, saving their money up to go out to dinner on the weekend maybe. This selective recession stuff I'm going to talk about today, very interesting. I love you got to give these guys props for these cool names they come up with for this crap. Basically, selective recession just means recession. It just hasn't affected everybody yet. But anyway, back to these markets. So the Dow Jones and the stock market, down day. Bond market, another down day for the bond market. Not in a big way though. Not one of those 10 basis point moves. The 10-year up 2 basis points, sitting at 4.43%. The 2-year up 4 basis points, 4.87%. So just not a lot happening in the bond market today. I'm sure the rest of the data coming in this week will give the bond market a little bit more direction. This is a long-term bear market for bonds. It's all self-inflicted. When the Fed's issuing bonds for years and years and years and years, at, super primo low rates for themselves. These rates drive the price of all of those bonds down, make all of those bondholders very unhappy, and creating a bear market in bonds, which we've seen going on for a couple of years now. The dollar rallies up today, a big rally for the dollar, up 32 basis points, knocking on the door at 105 again, sitting at 104.94. This was part of the reason gold and silver took a hit today. I think that, truthfully, some of this is profit taking by traders too, futures players. These gold and silver have had such a dramatic run up, especially silver recently, man. Went from like 28 to 32 like that. I think some profit taking as we move closer toward the end of the month. Guys want to get out of these options contracts. I think that was a part of the move today. Part of it, stronger dollar. Part of it, Fed and market. I don't want to use the word manipulation, but it was not a great day for gold and silver today. Oil also coming down, as were most commodities today. Oil down $1.09 per barrel, $77.57, moving back toward our target between 70 and 75. I'm telling you guys, it looks like we were right about that. Even though we've had some spikes and it hasn't been in that trough for a while, it looks like that's the magnet that is, and it just hasn't been able to click it back on yet, but it's gonna. Bitcoin today takes a little bit of a hit, minus $305 today, still sitting at a very lofty 69,392. Been banging on the door to 70,000, getting up over 70,000 midday, but not been able to sustain it. So we'll see how this goes toward over the rest of this week. You saw the big move on the ETFs for Ethereum. So that one moving. Guys, cryptos are moving into the mainstream. There's going to be big rallies on the major ones. Will all have big rallies. All right, let's talk about selective recession, shall we? This was the phrase that I was reading about today. You got to give these knuckleheads credit for creative naming. They come up with these wonderful phrases like this, right? Basically, what it means essentially is we're already in recession. Not all the data supporting it, but the recession is for the bottom half of the people in this country. Okay, the bottom of the half of the middle class and the lower income groups. Polling showed. Listen to this, guys. Polling showed. Now this was over 2,000 people polled. 70% of lower income people say that they are struggling to make ends meet now, going further into debt just to buy the necessaries. 67% of the middle class households say that they are falling behind financially. So now even the middle class being dramatically affected by these higher prices, right? Let's see, where was I at here? Blah, 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 blah. Oh, yeah. Polling shows that the falling inflation numbers, we've seen them, go from the peak of around 9 down to about 3.5, where it's been sitting now for the past few months. People really aren't paying much attention to that number. People who watch the market like we do, people who talk about the market like we do, are talking about that number. But what people are really looking at now, and me too, truthfully, when I go to the store especially, is the accumulated price increases. So 3.5%, you hear that? Well, year over year, it's up 3.5%. But the 22% baked in right now over the course of this inflationary cycle. So what happens is they hear inflation's falling. They go to the supermarket. Is inflation falling? Not that they can see. They go to the gas station. Is inflation falling? No. They're pricing out cars. Is inflation falling? No. How about their insurances? How about every single thing on earth? Now the prices are higher. They don't really have to get much higher. They're already high enough where people are having trouble just basically making ends meet on those prices. So when they say selective, what they're saying is only a select group of the overall economy affected by this recession. The upper class, the big money earning people, well, they're not. They're affected, but more inconvenienced. They go and they see something that they've paid X number of dollars for in the past. Now with this accumulated inflation is Y number of dollars. So they adjust their life and they don't buy that one, they buy a different one. That's the inconvenience. A little bit different than having to choose between your power bill and your car insurance, between your prescriptions and food. So it's a little bit different scenario. Now listen to this, guys. The mood is super pissed off right now. Super pissed off. Okay. 38% of the middle class say they do not even have $1,000 saved. I don't know how you can be part of the middle class and not have $1,000 saved. I mean, that's just bananas. But this is the state of affairs here. And it's only because of the culture we're in, where, besides maybe on this show, is saving encouraged anywhere? Who's encouraging anybody to save? I heard you get 10,000 images a day between driving and road signs, radio commercials, TV commercials, newspapers, and internet ads, and everything else. 10,000 images a day you get encouraging you to spend more money. So people spending, not saving. As a result, 38% do not have $1,000 saved. Consumers are going to be pissed about this for a really long time, guys, because the prices that have gone up, what do you think the chances are of those prices coming back down? I tell you now, the chances of that are, if not slim, even worse, minute. Okay, maybe some stuff will back up a little bit, but we're not going back to the prices we saw before the corona pandemic, right? The New York Fed now coming out saying we have a 50-50 chance of a recession over the next 12 months. So here we go, guys. Crap, and more crap. People not affording it. Well, we've been talking about here for a long time. People's debt catching up with them. They're on a treadmill now, like I've talked about, that slave to payments. They run, work their butt off 40, 50, 60 hours a week. They collect their money. They make payments. That's what they do. That's their existence. They work to make payments. They don't save money. As you can see, of 38% don't even have $1,000 put away, guys. This is like the fundamentals that you teach your kid when they're 16, not when they're mature, not when they're having their own kids. Not good times. And this tells me here that when this recession does roll around, guys, it's going to be a bad one, because a lot of people, a huge section of the economy, is not prepared to deal with a recession in any way, shape, or form financially. A job loss is devastating, could mean bankruptcy, could mean foreclosure, could mean can't pay the rent, kicked out on the street, could be. This is going to get ugly. We'll see if we can make it through the election. I think that we probably will. They hate recessions before an election. But after that, whoever the lucky one who gets selected is going to have to deal with it. High inflation, recession. Oh, God. I don't even know why you'd want to be president going into that stuff, right? So polling shows that Americans are in just the most pissed off mood. The majority polled, 56%, believe the U.S. is in a recession right now, even though GDP has been pretty good, right? More than half, the majority of people, believe the S&P 500 is down this year, okay? And the S&P was up 24% last year, up 12% so far this year. People believe the S&P 500 is down. The majority polled, get this, guys, the majority polled believe that unemployment is at a 50-year high. It's been under 4% for 2 freaking years. But the majority of people believe unemployment is at a 50-year high. Guys, how is this possible, where So many people, the majority of people in this country, are so disconnected from the reality of what's really happening. I guess it's their own personal situation. When we see this polling, it tells us more than half of the people are having difficulty making ends meet. It's not a surprise that more than half would believe we're in a recession. People out there now, the 50-year high for unemployment, that's kind of a surprise to me because most people know jobs have been pretty strong. But now here's the interesting thing. 58% of the people polled blame Biden. How could it only be 58? This is his economy. This is his Bidenomics. I would think that would be 158%. But the truth of the matter, it doesn't matter who the president is. You really believe Trump's going to make all of this stuff better? I don't. And so we get, this election is just going to be the worst because we got a choice of crappy and crappy. Anyway, so Americans really pissed. And here's the interesting thing. Most Americans have not really felt good about the situation in this country since 2004. Okay? You think about everything that's happened from 2004 to today, right? We had the Iraq War, the disillusionment with the Iraq War, Obama's election, the 2008 financial collapse. Then we had, the rise of Trump with Hillary in 2016, 2020, the pandemic, COVID. It's just been one friggin' thing after another. And now we've been enduring Bidenomics here. No wonder everybody thinks everything's so crappy, right? I mean, it's not a big surprise. Here's an interesting thing. Here's another cool name they created. Have you heard of this? An ALICE? Are you an ALICE? Listen to this. ALICE stands for Asset Limited, Income Constrained, but Employed. So basically, this is the person, the gap person in the country who's working, making money, too much money to get any kind of assistance from the government, but not enough money to live any kind of real life. So this is the new acronym for that, an ALICE. This is basically, a person who's barely getting by, the person we talked about in these polling, right? Guys, 29% of Americans, 29% say they're in this ALICE category, where they're barely getting by, can't get assistance, but can't really get ahead. 13% of the country is in poverty, meaning less than $31,000 per year for a family of four. So between those two groups, you got 42% of the country feeling like they're basically living in poverty. 42%, guys. It's going to keep getting worse before it gets better. And lastly, to wrap things up, if you see this craziness, they're talking about foreclosing on Graceland. I guess some company out of Jersey trying to create a fraud, because apparently that's what this was, claiming that Lisa Marie, before she died, borrowed $3.8 million from them, never made a payment. So now they're trying to foreclose on Graceland. Here comes the daughter or the granddaughter to save the day. She's the inheritor of the estate. And I guess Graceland is going to be saved. But guys, it's freaking madness out there. We're going to foreclose on Graceland. I was there, and I'll tell you right now, every single day that Graceland is open, there's a gigantic line of people going there to check it out. The whole area around there is all Graceland related stores and shops and bars and restaurants, everything relevant with Graceland. The idea that it could even be remotely come close to being foreclosed is pretty sad. Anyway, that's it for the day, guys. As always, we appreciate your support. Make sure to hit the thumbs up, the like button. Make sure you check your subscription. Make sure you check your notifications. Share the video with your friends. Don't forget to do that, guys. We're trying to pump the show up, trying to get it out there in front of a few more people every day. With your help, we can get it done. Tomorrow we get unemployment and a whole bunch more data. We'll be here to talk about it, guys. In the meantime, till tomorrow, take care. Thanks.